Before we go any further, please keep in mind that we're giving away $500 to a random subscriber. All you have to do is like the video, subscribe, and leave a comment on your favorite crypto. Read our description for more info about it. Now, let's get started with today's video. Let's talk about how Dogecoin is doing right now. It's in the red again and fell by around 2.4% in the last 24 hours. That was partly because Bitcoin also fell back to around 47K today. If we look at the correlation between them, it currently stands at 0.8. So, it's constantly rising. And that's good for Doge because new analyses for Bitcoin suggest that Doge is also going to the moon. The popular trader and analyst Michael van de Poppe said that Bitcoin will reach 300K. He also said that, "I don't believe Cathie Wood's 500K prediction, it's kind of ridiculous. 500K would put Bitcoin close to gold in market cap. It just doesn't make sense. But Plan B's stock-to-flow model has 250K to 300K as the top. The current market cap is around $2.3 trillion, but in this situation it would surge to over 10 trillion, which is comparable to the dot-com bubble." He also said that Bitcoin will surge because of institutional investors' increased involvement this year. And that's the key here. According to a survey by Fidelity, 52% of institutional investors have invested in Bitcoin or some other crypto, and 90% find those assets appealing. The report also found that the overall market sentiment towards Bitcoin and crypto is neutral to positive. And then there was this statement from Binance CEO. He said that the financial institutions are coming big time. We also see the traditional financial services from some of the bigger names moving into the space. And I think I have to agree with it. As I've said before, there's a lot of money on the sidelines. Institutions are waiting for the first ETF to be approved, and it looks like the first one will be approved in October. That's according to Bloomberg's ETF analysts Eric Balchunas and James Seyffart. And this is important because these ETF could be the key to getting Bitcoin and Doge to the moon this year. The Shark Tank star has predicted that Bitcoin ETF will lead to $1 trillion inflow. He also said that if the regulator finally allowed financial services companies to call Bitcoin an asset, put it into an ETF in the United States like they have in Canada and other countries, I figure there'd be another $1 trillion worth of buying into Bitcoin. Let's put that into perspective. Currently, Bitcoin's market cap is around $900 million. At a $2 trillion market cap, its price will be at around 100K, and that will put Dogecoin to around 95 cents to $1.1 by the end of this year. This is because most of the time when Bitcoin rises, Dogecoin rises by a higher percentage, and when Bitcoin falls, Doge falls by a higher percentage too. It's always been a bit more volatile than other cryptos. Another thing that will pump Bitcoin and Dogecoin will be their mass adoption. Last week, El Salvador's official Bitcoin rollout began. And now, Ukraine has decided to jump on it too. It's reported that Ukraine's president has sent a team to El Salvador on a fact-finding mission to aid his plans for crypto adoption. In just 10 days after its debut, El Salvador's president has reported 1.1 million citizens are now using its Chivo wallet. This implies that despite all the news for Bitcoin protests in El Salvador, people are actually embracing it. Let's talk about Bitcoin's price for a minute. Yesterday, it jumped towards 49K, hitting around 48K before turning lower on interim profit-taking sentiment. Nonetheless, the move uphill raised expectations that it could hit 50K in the coming sessions. Coming back to predictions, another bullish one came from Mike McGlone. He's Bloomberg's senior analyst. So, he recently said that Bitcoin will touch 100K by the end of this year. He said that the decreasing supply of Bitcoin and the growing adoption from various investors could propel BTC to $100K by the year's end. To strengthen his claims, he pointed out three major reasons. First, he talked about the decreasing supply of Bitcoin. The speed of the creation of new Bitcoins reduces every 4 years after an event called the halving. After the latest one in 2020, the rate is now down to 6.25 BTC per block. In other words, 3 million Bitcoins became completely inaccessible because of this. The second reason was that the long-term holders seem determined to retain their Bitcoin holdings and refuse to sell even despite the crash. And the third reason for him is increasing adoption, which we just talked about. Its demand has been rising consistently, even despite the dip. The whales and institutions are looking really bullish. Right after the dip, Michael Saylor bought another 5,050 bitcoins. Coming back to adoption, a survey has found that 25% of the youngsters in the US are interested in tapping the incredible return potential of cryptocurrencies. Before we talk more about it, I'd just like to remind you that I'm not a financial advisor and this isn't financial advice. So you should definitely do proper research before investing anything into crypto. Coming back to it, around half of the teens surveyed believe in timely investing in stocks and consider it as a lucrative option for gains. But the remaining half is not interested in stocks and looks at cryptos as a greater option. When asked for the preferred investment option, 43% of the teens considered cryptos as the best option, without giving a single look into stocks. Now, let's come back to their correlation. Based on the correlation analysis, BTC and Doge have a strong positive relationship. The correlation between their prices for the last 3 months is 0.25, and that's incredible. So the average of the last 30 days is 0.8, and for the past 90 days, it's 0.25. That tells you that it could rise even more from here. So the positive correlation tells that the prices are moving in the same direction. The knowledge of the correlation coefficient helps to determine in percentage the influence Bitcoin has over Dogecoin. If we take all the aspects affecting the price of Doge as 100%, then the share of BTC price among these factors will be 42.25%. The other part, which is 57.75%, covers all the other things, such as media, events, or regulation. And that's a pretty big percentage, which makes me quite optimistic about Dogecoin, considering that Bitcoin is quite likely hitting the 100K mark this year. Coming back to Dogecoin's analysis, Dogecoin has to stay above the 21 cents mark for prospects of a bullish rally. Buyers are attempting to stabilize price action in Doge, but a bull trap is starting to form. It looks like bulls aren't able to push it above 26 cents at the moment, and the 55-day simple moving average just below it is adding a cap on the price action. If buyers are successful in avoiding the bull trap and break above 26 cents, the volume will be added to the charge higher. And considering Bitcoin will most likely hit 50K in a couple of weeks, Doge will follow its path and rise above 26 cents and then 32 cents. I think it'll take at least a couple of weeks from here because, according to the stock-to-flow model, Bitcoin is getting ready for another dip to 43K in September. But this is going to be good because if it comes true, it'll be another green flag for the stock-to-flow model, which predicts Bitcoin at more than 60K in October. One thing that could cause another dip is some bearish comments from some higher-ups. Recently, ECB president said that cryptos are highly speculative and suspicious. He then started praising stablecoins, which stand as the biggest competitors to crypto at the moment. So, let's see how this plays out. And this is it for today's video. Thanks for watching till the end. If you enjoyed it, please consider liking and sharing it with